Though there has been so much information about market, mutual funds, equity culture in India, microcap still is not discussed by institutions. In March 2023, this company was trading at 1800 crore valuation. Today, the market cap is 12,000 crore, almost a 6x. So, out of 5,000 plus listed companies, 4,000 plus are in the microcap range. Technical patterns everybody understands. We look at different fundamental patterns.
Can you give me an example of a fundamental pattern?
Go deep on only one, which is variant perception. The best way to learn about a business is not by looking at what other investors are doing. The best way to do is
Now, if you had to take two sectors that you're bullish on and something that you're seeing play out under 3,000, what would they be and why?
so.
Hey guys, so in today's podcast, we have Ankit from Zen Nivesh, who is an RIA. Now, they put a lot of blog articles on companies under 3,000 crore market cap. Now, they are mostly looking at microcap companies and they have this thing of finding value in them. Now, in this entire discussion, we spoke about his thesis of investing, his investment framework, some very interesting companies that he's looking at, and where some companies went profitable and where some companies actually went negative. And we discuss all of this in today's video, and we look at a lot of small cap and micro cap companies. So you guys need to be tuned into this. Hi Ankit sir. First of all, I am very happy that you took some time out to come and educate all of us today on this Connecting the Dots podcast, right? So Ankit sir, first things first, I want to understand from you what led you to create Zen Nivesh, because I have been tracking your company and some amazing blog articles have come in the past, right? Even now it's coming, not just in the past. But I want to understand, how did you come to this journey? How did you come here right now?
No, first of all, thank you so much, Shashank, for having me here. I've watched some of your podcast videos and some of the guests. I actually follow them and I have high regards for them. So I consider it as an honor that you have thought me worthy enough to come here. So coming to Zen Nivesh started very recently in April 2025. Our focus was very clear right from day one, is that there are many people in the RIA and education community who are doing wonderful work. You are also one of them. Who are doing wonderful work in the industry. How do we create a mark of our own? Something where there is a gap, where people don't understand things in the right way. Now, if I talk about, say, HDFC Bank or Eicher Motors, I don't think I can add a lot of value because many large institutions are already covering those kind of businesses.
Yeah.
So I will not be able to add value. What I can do, and what is where there is the biggest misinformation in the market. So we identified that microcap is a space. And when I say microcap, SEBI doesn't have any clear definition of microcap. For SEBI, it is large cap, then mid cap, and then there are 5,000 companies in the small cap range.
Correct.
But we are talking about only microcap. So in microcap, generally, what we have seen is that people belong to two end of the spectrum. At one end, we have people who are only looking for tips and social media discussions, and they lose money a lot and then they blame the market about it. And then at the other end, we have so many people or investors who are so scared about this space that they don't even look at it.
Yeah.
They think that less than 3,000 crore market cap company, let's not even touch it.
But why is this?
This is because in general, institutions or large, say PMS or AMC, they will not promote this because it's in their interest to talk about companies or businesses which is in their ambit. And say, for example, if you are 1,000 crore or 1,500 crore AUM company, you will not be able to invest in a small microcap company.
Correct.
Because of liquidity issues.
Correct.
If you buy or sell, there will be a lot of movement in the price, which becomes difficult for you to accumulate those stocks.
Yeah.
So why will they talk about it? So that is why, that is one reason that even though there has been so much information about market, mutual funds, equity culture in India, microcap still is not discussed by institutions. That is one reason.
Correct.
Second reason is the best investors in the microcap space, they will not come on podcast.
You mean to say the superstar investors usually don't come on
Yeah,
podcast?
they silently do their work. They are doing their work for 20 years, 30 years. I've been lucky, or rather, I should say, I'm blessed to know quite a few of them who are doing it silently because they don't want popularity. They are not selling anything. They don't have any course. They don't have any business. All they are doing is full time, 100% investing. And they don't want to deviate from that. But the good part about them is that when you go to them as a student, as a learner, they are very open to share their learnings.
Interesting.
So our job at Zen Nivesh is just simple: to learn from them and share it to everyone.
Got it. So I want to understand more on this space because I also want to remove some of the myths that might be there in this thing. So I'll give you some questions on the myths, right?
Sure.
So one thing people say is 3,000 crores ke niche, which is microcap, information is not there about the company. Is that a true statement or not?
If you would have asked me this question 10 years back, it would be an emphatic yes, that's true. I would not say that's completely true today.
Okay.
Because, of course, there are still. So, when I say microcap or say less than 3,000 crore market cap companies, let's first understand how many companies are there. So, out of 5,000 plus listed companies, 4,000 plus are in the microcap range.
Oh, wow. Really?
That is how wide. And there will be so many tiny, obscure companies which we also don't look at. We are not trying to put darts there. We are doing actual research. So your space is not 4,000 companies. It will be probably say 200 or 500 maximum.
Good companies.
Yeah. But small companies.
Small.
Good, small, not chased by institution because it is too small for an institution to look at. So when I'm talking about these 200, 500 companies, they could be anywhere in the range of say 100 crore to 3,000 crore market cap. There are a lot of companies which are coming up with a lot of information.
Okay.
Number one, you can see the quality of annual reports have become very good in the space. Some of the managements have started doing con calls quarterly.
Yeah.
Some of the management also share a lot of detailed presentation. Then I would also like to mention Alpha Ideas, Mr. Nitin Rao. He does an Alpha Idea SME meet every year. He's been doing this for last 5-6 years, I guess. Pre-COVID he started. 2019 is when he started. In those kind of events, lot of SME companies come and the management comes and they present their case to the audience.
So normal audience, people like me can also take a ticket and go.
Yes. Anybody can. In fact, it happened in the month of August. I was one of the audience there.
Wow.
So we regularly attend events like that. So when you go into, as a management, when you go and present in those kind of events, you get a lot of good quality investors who will also give you right kind of insights as to what you should do. Because that bridge has to be
correct.
नीचे कम करना है उसको, right?
Correct.
Whatever it's there. So how that happens is that your communication between the management and the investor has to improve, and that has already begun. So and the best part is that if you write to a management, and this is I'm saying with my own experience of over 10 years or so. Before 10 years I was not writing to management, but since last 7-8 years, 10 years I'm writing to management also. If you write an email to them simply saying that I'm interested in your company, I've done this work, I have found this interesting, I want to meet you, I would say out of 100, 90 to 95 will say yes. Some will say yes immediately, some will say yes after 2-3 emails. But 90 to 95 management are ready to talk to you. Maybe they will say that don't record it, don't share it outside, we are not very comfortable talking about it in the open. Or what they can do is that, okay, we are ready to do a podcast. So different kinds of management will say in different ways, but majority of them are ready to share.
They're open to talk.
They're open to talk. The problem is within us.
Yeah.
Like I'm reminded of, maybe I'm going a little off. I'm reminding of that Galib's quote where उम्र भर गालिब एक ही भूल करता रहा, धूल चेहरे पे थी और आईना साफ करता रहा. So the mistake is in us.
Yeah.
As investors, we don't try hard.
Do you think it's a bias investors have that small cap, micro cap matlab risky hai, but even mid cap and large cap companies fall 40-50%. It's not just.
So see, the problem is this. As I told you, when you look at the 4,000 universe, then you will have a lot of losers there.
Correct.
But your universe in general is not 4,000.
Correct.
You are looking at the top 200, 500 high quality small cap or micro cap companies.
So now if I had to ask you at Zen Nivesh, what is that investment framework you have built to find these quality 200, 250 companies in 3,000 crore market cap? How do you find them?
Sure. So I'll give you two ways in which we find. So one is basically the top-down structure which we have. So we have 4 mental models which we have created for microcaps. And we write regularly on our blogs, which is a Zen Nivesh Substack blog, about this with examples also. No recommendation. We are not asking anybody to buy any stock whenever we write on it, but we try to write in detail as to why we are thinking about it in that way. So number 1 is turnarounds, restructuring, and high convexity investing. What is high convexity? There are companies which are having a bad past and they have not done well for say 5 years, 10 years, or maybe 15 years. But there is some restructuring or turnaround happening. And because of that, loss-making company will turn profit-making.
Correct.
Or very low ROE company, return on equity, will turn say 15% or 20% ROE. So that is the convexity I'm talking about. Something which was completely in oblivion and then suddenly people will start noticing it.
So a forgotten company changing the fortunes.
Exactly. Okay. So my co-founder Harshal wrote on a company last week only, which is Nitco Limited. Again, not a recommendation. I don't own it. He doesn't own it. We're just giving you an example. That is one. Okay. Similarly, this is the one. We have 3 more. One is basically high growth, high tailwind, and yard investing. What do we understand by yard investing? First of all, if I talk about yard investing, I have to give credit to my guru and mentor, Atul Rawalji, who is based out of Gandhinagar, Gujarat. And this is what I learned from him, where he says that yard investing is you have to understand yard and train, railways and platform. So what he says is that in yard investing, you have to buy a stock when it is in the yard. Not gone out of the train yard. Not in the platform. Because when it reaches the platform, there will be a lot of people waiting to board the train and you may not be able to board it. Because the stock will run up fast and all. You have to buy it when it is sitting in the yard.
Interesting.
And it has a long runway. So that is the analogy over here. So last week actually, Shivam, my other co-founder, he wrote about Kalyani Castech, which is an SME company. Again, as a disclaimer, Shivam is invested in that. I don't have any holding in Kalyani Castech. But these are just examples I'm giving you. So that is second. The third one is special situations. So in special situation, what happens is, even though from a business perspective or the stock market perspective or an industry perspective, nothing has changed. But there has been some special changes in the company, maybe because of corporate action, maybe because of management change, demerger, all these related things can unlock value.
Correct.
So we write on those we find those kind of opportunities as well. So that is number 3. And number 4 is deep value. And when I talk about deep value, I'm not necessarily talking about very high quality businesses, but decent businesses which are doing decent, have decent growth, decent management quality, but the market in general has forgotten them. Maybe market has a history of its market has a memory of its history, which was not that great. Now they are not doing that bad. They are actually doing decent. But market is not giving them.
Got it.
So there, in those kind of cases, your real edge is your ability to hold on for a few quarters. Because you don't need any reason. You don't have any catalyst to play.
You have to just wait.
Just wait for say 4 to 6 quarter or 8 quarter. Sometime the market will realize.
Got it.
Of course, the flip side is deep value and value trap. There is a very thin line separating the two. So you may get wrong also. It's not that everything will fall in.
Of course.
So this is the top-down approach of 4 different mental models which I shared with you. Another thing which we do, which is more close to my heart, is we look at different fundamental patterns.
Like what?
I'll come to you. So when I talk about fundamental patterns, generally people don't understand what I'm going to talk about, because technical patterns everybody understands.
Yes.
Why technical patterns everybody understands? Because it is very easy to follow and very easy to measure whether you were right or wrong in that pattern. Because it happens in a matter of minutes or weeks or months. But in case of fundamental patterns, what happens is that because it takes several months and sometimes several years to play out, and there is a lot of risk, skill, and luck in play, you find it difficult to actually understand what is playing out, whether it was your skill, whether it was luck, or most of the time it is a confluence of all these three things.
So can you give me an example of a fundamental pattern?
So one of the fundamental, so there are many fundamental patterns. We share it with our members regularly, but I'll go deep on only one, which is variant perception.
Variant perception.
So what is variant perception? I'll give you examples also. So let me just explain to you what is variant perception. Variant perception is where there is a consensus view about a particular business in the market. You have a completely opposite view.
Like a contra.
Like a contra view.
Okay.
Like a contra, but not exactly a contra, because over here you have a variant perception in the sense that you know something about the business which generally the market is not aware of. And when I say know something, it doesn't mean that you have some insider information. It is more about your insight about the business. So I'll give you examples of the current two variant perception. And one thing which I need to say is that you can't have variant perception thesis for 20 stocks.
Correct.
At any point of time, maximum 1 or 2 stock is where you can have a variant perception, because market, you have to respect the market. Market more or less is always right.
Yeah.
Okay, it's not that market is stupid and you are the person who knows everything.
Correct.
So market in general is always right.
Got it.
Most of the time right. Or even if it is right, sometimes the time frame is something which you don't know. The important thing to know is in 1 or 2 stocks at one point of time, at any point of time, you may have some variant perception or some insight which the general consensus doesn't have. So I'll give you 2 examples here.
Okay.
Number one is a cash management company which is less than 1,000 crore. I think it is right now 700 crore market cap company. Before I begin, I am invested in the company.
So let's not take the name. Yeah.
Okay.
Let's not take the name.
Sure. No problem. No problem.
Wonderful.
So the problem is the market thinks that it's an ATM cash management company.
Okay.
My answer to that is no, it is not.
Even I thought it was an ATM cash management. Okay.
So it is not. It's a retail cash management company where what it does is that it helps retailers to manage their cash flows, in the sense that whatever cash they generate on a daily basis, they help them manage that. So sometimes what they do, they'll pick up cash from their retail outlet and put it into the bank account.
Like a gold store or whatever?
Yeah.
Any retail outlet?
Any retail outlet. Second, what they can do is, if you have a store where there is no bank account or no bank branches, so what they'll do, they'll say that give us the cash. They'll deposit the cash in their own bank account and then they'll transfer that money to your account same day.
Okay.
So you as a retailer, you are sorted. You don't have to worry about your cash loss. If what you would do if they were not present, you would have to keep up an employee. An employee, you need to pay him. There is a risk of theft.
Correct.
Somebody taking money from him, or maybe he runs away. All those risks are on you. When you are taking their service, you have zero risk the moment they take cash from you.
Interesting.
And they are 100% insured. So even the risk is not in their books also. Okay. That is one. That is one misconception people have in general about that company. Second, people say that cash circulation in the economy is going down because you and me and everyone around us are using UPI.
Yes.
So it's not entirely correct. I'll tell you how. It's correct that we are using UPI. And there is no denying the fact that the UPI transactions are soaring, and it will further increase only given if you look at it in the future. But cash is not just about what you are seeing in terms of what you and I do on a daily basis. We are thinking from a point of view of our consumption or as a consumer. If you look at hard data, the amount of cash in our economy has tripled since FY17.
Wow, I didn't know that. Okay.
And I am talking last 4 years of post-COVID area where actually UPI has soared.
Correct. So cash is still going on.
Now I'll tell you why it happens. RBI has a clear mandate. Every year they print new currency notes and it goes out in the open.
Correct.
Through banks. Okay. And this is something which everybody knows. What I'm going to say next, very few people know. On an average, 1.5 years to 2 years, they take back all the old notes. So if RBI is releasing new currency notes in 2025, before 2027, they'll take it back. All those currency notes, they'll take it back. And they'll reissue a new next year.
Okay.
And that is where these kind of companies, they act as reverse logistic players. They will bring back those cash from all retail units, from other areas and give it to the banks. And from banks, it will go to back to RBI, which people don't know. So when you look at things from this lens, then you will suddenly see this space is very interesting.
Is this the only company doing it?
No, there are 2-3 companies.
There are 2-3 companies.
I'm talking about one company right now.
Got it.
I am invested in 2 companies in this space.
Okay.
Because this industry itself is out of favor in the market.
Yeah.
And I think it is offering a lot of value.
Got it.
I'll just repeat, this is my own biased view. I may be wrong. I'm not making any recommendation.
Yes.
But this is how we look at things.
Okay.
So that is one example. Another example, again, I'll not take the name because I'm invested in the company. It's a new age tech company which got listed at that time only when all the new age companies got listed. I'm talking about end of calendar year 2021.
Okay.
In that level only.
Platform play or a new age tech company?
Platform play. Okay. Platform tech, both involved.
Got it.
It's an integrated business in that way. Now what it does, in this case, the market was very bullish on the company when the company was reporting great numbers and the management was giving very high guidance. In fact, 1.5 years back, they did a QIP. And the QIP was also celebrated.
Okay. Wow.
And everybody was very happy with the QIP. Many large institutions invested or participated in that QIP. Okay. Now, post that QIP, the problem is that the company has not invested that money into what they had said that they will do. So what did they say? That they were raising QIP money to do acquisition. And from the time till today, they have not done any acquisition in the last 1.5 years.
What is the company in? Like the business?
They are into basically hotels.
Okay.
They provide technology to hotel companies.
They provide technology to hotel companies.
I can explain more also. I have no issues. So what they do, like for example, in a very simple layman, if I have to explain, what is the biggest problem for hotel companies? During peak time, they end up selling their room at subpar rate because they are always afraid whether they will have enough demand or not.
Correct.
And during off season, there is a lot of capacity which is unutilized.
Correct.
What these travel tech companies do, they help them plan their inventory in the right way using their tech engine.
Okay.
So what happens is that you as a hotel owner, you will know what your competitors are doing at different times. Like in lean period, in peak period, in peak season, what is the kind of demand? You will not know the name of the competitors, but as a whole, what is the competition doing?
Got it.
So you have that data.
So it's data enrichment
exactly.
for
data and insight.
Data and insight. This is okay. This is a tech company that recently it fell down right now.
Yes.
Recently it had a fall.
Yes.
Understood. Okay.
So
interesting.
So what my view over here is that why market is so now let's come to the variant perception.
Yes.
What is the consensus view? Consensus view is to a certain extent true. Number one, they say that the management was very super bullish on the guidance in terms of growth earlier.
Yes.
And they continuously kept on reducing the guidance.
Correct.
It was 20-25% revenue growth. From there, it fell down to 15%. If you look at the last con call, they have guided for 10 to 12% revenue.
Correct. तभी गिरा था वो.
Exactly.
Yes.
Okay. So now my point is very simple. That yes, that is a problem. And it's a B2B business. It's not a B2C. In B2B business, what happens is that your dependency on one or two large customers are generally high, especially when you are small. So one of their B2B customer terminated their contract. So that is one hit the company took. Second, market is, as I said, is not happy with the company because they raised QIP money saying that we will invest in acquisition. Now you go back and see their track record. The company has done fantastic acquisition in the past.
Correct.
And the one feature which has stood out for them is that they have always been very cautious about what value they want to pay. In fact, I'll give you one instance. In one particular acquisition in 2018, what happened? They basically were the second highest bidder for a company. The highest bidder was a Chinese company. But they said that no, we don't want to match that. You please go ahead with them. We are fine not taking that bid. After a few months, the company which was supposed to be acquired, they came back to them and they say that no, we had some problem with them and we are ready to get sold to you at your price.
Interesting.
So what it shows is that they are willing to wait for opportunities because they want to buy at their valuation.
Right price.
Not at the right price. That is the right way to look at it. In fact, their latest acquisition, which was in 2023, I guess, this company was trading, the company which I am talking about was trading at 7 times sales. And they bought a company at 0.7 times sales.
Wow.
This is the kind of difference you can see.
There's a very big arbitrage
Exactly.
alpha just in the acquisition. Okay.
Exactly. That is how they play. Apart from that, one interesting thing which they did during that acquisition is that they only bought the assets. They didn't take any of the loans which was outstanding in the company. So that is the kind of deals they wait for.
Interesting.
So when a management is not just talking, but also exhibiting in its action, I would give it a longer time.
Yes.
And they have been maintaining it in their con calls that we are getting a lot of acquisition candidate, but we are not getting it at a price which we want.
Not happy with it, yeah.
So I would rather be happy to wait for them to get the right price rather succumbing to the market pressure and invest at any kind of valuation. And their market is 98% is outside India right
Correct.
now. India, they don't have much business in India. So like so many geopolitical tension is happening all around us. Now if anything happens, there will be a lot of players in the US, in the European economy, who would be bleeding.
Yes.
And then these guys will have jackpots.
Yes.
So as investors also, we should wait for those kind of moments. Maybe that is around the corner, I don't know. Or maybe it will happen sometime later. And the last kicker is that today the company is available at a valuation which was never available since the time it got listed.
Correct.
So even if, say, acquisition takes time, even if, say, growth will take its own time when it comes to revenue or profitability.
Yeah.
Because they are doing a lot of investment in teams and sales.
Yeah.
So their margins will also probably dip if they don't do any acquisition. My point is that I'm getting paid to wait because the valuation is come down.
Valuation comfort comes in now.
So either you can have good news or you can have good price. You can't have both.
That's when you exit.
Exactly. Exactly.
Yeah.
So that is what I'm seeing there. Having shared these two examples, I'll tell you one learning from the past. Not everything will play out as per your wish.
So Ankit, this variant perception that you have spoken about, we've got two examples, but I want to know how you have used it to either make a good profit in the past or maybe something that you invested that did not play out the way you wanted to play out. Because as you said, mistakes can happen and sometimes they win, sometimes they lose. So do you have an example of one winner and one loser according to variant perception? And what is your learning more than a loser?
Yeah. So before coming to the examples of losers and winners, I wanted to share this particular thing is that I've been investing since 2010. So about 15 years. And if I have to count or maybe roughly give you a breakup, I would say I have had 70% losers and 30% winners.
Okay.
But if you are not leveraged and if you are humble enough to accept your mistake, take a loss, and if you let a few good winners ride, then you do okay. When I say okay, I'm saying you get market beating returns. Now, I don't want to go too much into it. I have already shared it in our blog, Zen
Yeah.
Nivesh, where I've written an article called Survive to Thrive, where I've in detail shared about my portfolio.
Got it.
So we can look at that separately. But what I want to focus on is that if you get your things right, 2, 3 good winners can actually take care of your portfolio.
Interesting.
You don't have to worry about too many winners.
Okay.
So if in 1 or 2 years you get one good idea, that itself is very good.
Got it.
So now coming to the variant perception thesis, I'm just going 2 years back. I'm talking about March 2023.
3. Okay.
So there were 2 companies on which I was very bullish. One played out as per as I thought, and one completely didn't play out as I thought. I'm making a disclaimer that I'm invested in both of them, and so naturally I'm biased. So I'm not making any recommendation. But let me just explain to you how these played out as variant
fundamentally
perception
how.
thesis.
Yeah.
So the first company I'm going to talk about is Indian Energy Exchange.
IEX.
IEX.
Okay.
IEX, when I started investing, it was a microcap stock. I'm talking about April 2020 when it was less than 3,000 crore market cap. Today it would be around 12,000 crore market cap. But if you look at the trajectory of the business, and not just business, rather if you focus on the stock price, in the last 2 years it has not given return. In fact, it would have given negative returns. My idea of IEX at that time was that market was only looking at one thing, which was market coupling.
Yeah, जो अभी न्यूज़ आया.
अभी न्यूज़ आया कि it has happened. Market
it fell
coupling
down.
has happened.
Yeah.
And it fell down again. So I had a clear thesis. I did a scenario analysis. What is the best case scenario? What is the base case scenario? And what is the worst case? So the worst case thesis has actually played out now. And even in the worst case, at that time, I was very clear that it made a lot of sense to stay invested in IEX at that time.
Yeah.
So what was my thesis? That people in general are thinking, or investors in general are thinking, that because IEX, because market coupling has come in the exchange market, power exchange market, IEX will lose its dominance.
Correct.
I would say that statement is not entirely correct. It will definitely lose market share.
I think it has a 90% market share or something.
So
plus.
that 90 can say maybe go down to 70, 60, I don't know. I'm just giving a rough idea. But will it lose its dominance? No, I don't think so.
Got it.
Because even the other players, they don't have anything extra. IEX has experience of launching really good products in the system. They have a very good high tech ability which others don't have right now.
Yeah.
And the market is still very nascent. The market itself will grow. And the problem, or the main structure of the market which has changed because of market coupling, the problem will be there for other players also, not just with IEX.
So can you give an example of what is IEX's major revenue, and why is this, what is market coupling and why it's affecting IEX?
Sure. That's a good point actually. So what is market coupling is, right now, IEX has close to 90% market share. So any business or any market, what happens is demand and supply forces play.
Yeah.
Wherever you have the highest supply, there the maximum demand will go.
Correct.
Or wherever you have the maximum demand, you will have maximum supply going there also. So the demand meets supply, that is where the market meets. So because IEX has been the first mover in this space, they have the liquidity which is required in the market, both side, from buyer side and also from seller side.
They're like NSC of the power space.
They are like NSC and BSC of the power.
Got it.
Power exchange market. Now, why will you come to BSC and why will you not be in NSC? So if you look at till the time BSC made some changes in their F&Os and other products, the volume of NSE was way, way, way ahead.
Correct.
It's the same thing which is happening here. Okay. Now, the only difference which has happened now with market coupling is that the government has said that now we will pool all the demand data and then put it into the system and then come out with a price.
Okay.
So it will be a consolidated price taking demand from all the segments, supply from all the segments, and then the price will be discovered rather than the price getting discovered at one individual exchange.
Interesting. Okay. So,
So
every
that
exchange will
takes
have
away the best edge of IEX, which is the liquidity it provides. Like for example, again I'll give you the analogy of NSE and BSE.
Yeah.
So if it's a very small stock which is only trading at BSE and not in NSE, there is a high chance that many people will not look at that stock.
Correct.
Forget about how good or bad the business is. It will not have that much of a demand.
Correct.
But if it's in NSE and it has a higher liquidity, there will be more demand.
Correct.
So naturally, people would prefer NSE over BSE in that kind of a scenario.
Correct.
Similarly, naturally, people would prefer IEX. The market participants will prefer, both on the buy side and the sell side, would prefer IEX. That will somehow go away, as in that dominance will somehow go away in terms of the market share come down because the new players will also get some benefit
Correct.
out of
Always. Yeah.
this new market coupling, this thing. But once they get the initial lift, what is their other added advantage? The other added advantage is all with IEX, with their experience, with the different kinds of product they have under their sleeve. Those things cannot be taken away by the competitors.
So, can I look at it from this perspective that IEX is an innovator like any NSE also?
Exactly.
Because even NSE has been an innovator. That's why they
Exactly.
went past BSE.
Exactly. However, now the things have changed in BSE and NSE.
Recently.
BSE has also done a lot of things.
Correct.
And so the point over here, coming back to IEX, that is one part of the story.
Yeah.
That is that maximum what I can see in the worst case scenario, now that the market coupling is done, probably it will not have 90% share. It will come down to say 70 or 60. I don't know. I don't want to put a number, but I'm saying, but it will still be the dominant player.
So, this is the perception of the people.
No, this is not the perception.
The
Perception
reality.
is that the progressively the market share will keep on going down and everybody will become equal.
33.
30 or there will be more, but it will not happen like that.
Okay.
That is one. Second, IEX is not just about energy exchange. There are two very good businesses which are also sitting inside IEX or Indian Energy Exchange, which will become as big as what IEX today is in their
Okay.
own.
What is that?
One is Indian Gas Exchange, IGX.
Yes.
It is also growing well. And it also has a lot of this, just like Indian Energy Exchange, Gas Exchange is also very, very instrumental for market participants in India. And again, it's at a very nascent stage. Most of the things happen outside exchange. So it will come slowly, it will come down here. So that is another. And over here, there is no issue of market coupling. Why? Because all the other competitors which were there for IEX in that field, they've all become co-owners.
Okay. Oh. Okay.
So you have a lot of PSU entities who are also owner in IGX. So the kind of issue which happened in IEX will never happen in IGX.
Correct.
So that is far more formidable business from that perspective. Maybe it is not as big as IEX, but still large enough.
Yeah.
And the third one, which nobody is even talking about today, is International Carbon Exchange. And mark my word, it is international. IEX is Indian Energy Exchange. IGX is Indian Gas Exchange. But Carbon Exchange is international.
Does this have anything to do with carbon credits?
Yes, it has. It has a lot to do with that. And carbon credit, if you go back from 2008-9, many people have tried their best to do that in the Indian market, but they have failed because they couldn't have the liquidity.
Correct.
IEX is already sitting with the liquidity. This is the dominant exchange in the market, and look at how many renewable sources of energy is progressively being added. So you think from that perspective, how much of value this business can bring to IEX as a whole.
Correct.
So when you put together all these things, the valuation at which it is trading gives you a lot of confidence that downside is limited. I don't know about the upside,
Yeah.
but downside is limited.
Correct.
So where I went wrong, it didn't play out in the first 2 years. I thought that it will play out in the 2 years itself.
Correct.
But I still am bullish because I think maybe it will take another 1 year or 2 years because of the quality of business. I'll give you an analogy of cricket over here. So like performance or merit decides everything, right? If a player is not performing, if a batsman is getting out on duck or smaller scores, the team management will obviously ask him to sit aside.
Correct.
And not picking him up in the next match. But then you have some players who are special, who have something in them, which is unique, which is their moat.
Yeah.
We talk about moat in business, but even players have moats.
Yeah.
So I'll give you an example of Rohit Sharma. From 2008 till 2013, he was not performing at all. 5 years he didn't perform well as per his potential, but he was still in the team.
Yeah.
Because he had something special.
Yeah.
And when he started unleashing his potential, you have seen what he has done in the next 10 years.
Of course.
I'm not saying that exactly that will happen in IEX, but IEX is also one that's special.
You have to see the potential. You have to focus on the
so
potential.
if it works out, see, worst case is it may not work out. So it is one of the stock in my portfolio and I'll lose.
Yeah.
Sometime in the future, I'll sell at a loss or maybe
Correct.
decent amount of returns. But if it works, it can completely catapult into something very big.
Asymmetrical. Yeah.
Exactly, asymmetrical bet. So when it is like that, you tend to be a little more patient with your holdings.
Understood.
You have the tendency to go wrong. I'm not saying that I'm 100% sure that I'll be right. That's okay.
Yeah.
But if I go right on this, it will be very, very, very good for my portfolio.
Correct.
And now that brings me to the example where it worked out really well in 2 years. So now the company which I'm going to talk about is CarTrade Tech. In 2023, as we spoke about IEX, in March 2023, this company was trading at 1800 crore valuation.
Really?
Yeah.
Oh my God.
Today the valuation is, market cap is 12,000 crore, I guess.
Wow.
So almost a 6x or something like that.
Yeah.
From that level. In a matter of 2 years. And in fact, I wrote a blog on this also, CarTrade Tech, a fallen angel or a value trap. Right in March 2023, I explained in detail as to what the market is thinking.
Yeah.
And where I think it can do well.
Yeah.
So, and luckily, I should give a lot of emphasis on the luck. Things played out as I envisaged. Like in case of IEX, I told you where things didn't play out as per my thesis, or it is taking more time in playing out. Over here, things played out in the perfect way in what I could have thought.
Wow. Okay.
So that is what happens. So I can't read the whole blog or talk about it.
Give me the
just
key
2-3 things.
points. Yeah.
It got listed in 2021. Actually, this was the first company in the new age tech era which got listed in the market. And there was so much of hype. You'll be surprised if I tell you at what valuation it got listed. It got listed at a valuation of 30 times sales. I'm not talking about earnings.
Way overvalued.
30 times sales.
Wow.
And people were like crazy. If you look at the subscription, so many people invested. And I want to put this point. Many people have this concept or wrong thinking in their mind that retail investors make a lot of mistakes in the market. Even institution does. They are no better than us.
We've seen
Don't
that.
think that. Don't think that. Everybody gets into that FOMO bandwagon and they make the same kind of mistakes. It's just that they are big, they are smarter, they will hide their mistakes, they will not come on social media and say that this is where I got wrong. But it happens with them also. So as an individual investor, don't think that they have any edge. So this is something which I really deeply feel from my heart. That's why I made this thing. So because a lot of HNIs also and institution also bought
this company. And then what happened?
At that time, it was trading at 1600 rupees a share.
Okay.
And March 2023, it was trading at 350 rupees, 75% down. 75% down. And these were the 2-3 concerns. The company got listed at very high valuation.
Correct.
It did a 100% OFS, offer for sale. There was no money coming into the company. Promoters, they reduced their stake, and investors had to buy at a very high valuation. My point is that anybody was forcing you to buy. I didn't buy at that valuation. It didn't seem possible for me to make money from that valuation. And I'm not talking about just myself. There are many investors who completely stayed away from those kind of valuation in the new age tech companies. But if you are patient enough and if you keep tracking the businesses, the market gives you opportunities.
Yeah.
And you don't have to look at all the stocks. If you get 1 or 2 stocks, that is good enough for you.
Yeah.
So that is the opportunity which I saw in CarTrade. In March 2023, I could see their main base business was growing at 25-30% year on year consistently.
Wow.
Second, market perception was at that time the market was always, in fact even today people only look at CarTrade as a second-hand car selling company online. That's a wrong way of looking at the company. So they cater to OEMs, they cater to dealers, they cater to consumers. They're doing a bunch of stuff. If you're only looking at it just based on what their other competitors are doing, again, that is where you have not done enough research on the company.
Yeah.
I'll just make a disclaimer here. The stock has run up a lot.
Yeah.
At current valuation, I will never recommend anybody to buy this stock.
Yeah.
But this is just a framework I'm just sharing with you. So what I could see at 1800 crore market valuation, 1000 crore was cash sitting in the books.
Almost 50% of the market cap.
Yeah. 50% of market cap was cash. In fact, more than 50%.
More than 60% almost. Yeah.
And again, I've explained it in the blog also, is that it's a very simple balance sheet to analyze. There are very few things you have to look at because it's a platform business. There is no fixed asset. There is nothing. In fact, if you look at the P&L account also, the biggest chunk of the expense is employee expense.
Employee benefit.
And all these employee expenses are generally fixed in nature. So if the company grows its revenue, it will have a very high operating leverage.
Correct.
And it will show up in the numbers.
Yeah.
And that is what has played out.
Wow.
Plus another thing was that I knew that this company has grown through acquisition. They have 1000 crore. They can do a good acquisition.
Correct.
I don't know what acquisition and when. That I didn't know. But then they got a jackpot in terms of OLX acquisition. I had no idea that they will go and acquire OLX.
OLX, yeah.
And they will get that kind of a deal which they got. So when things are not certain, that is where you get the best of bargains.
And I also feel one more thing here is that when we look at a business, let's say in 2023, people often discount the fact that it evolves over time.
Exactly.
Like I know in CarTrade, for example, they have one line of business now called valuation of the car, and they make money on the valuation of the car. They'll actually tell the second-hand valuation of the car. If you want to sell tomorrow, you can.
Yes.
That was not there, not very big in the past, or sometimes new line of businesses come.
Yes.
So that is something I think people discount on founders.
Yes.
कि ये ही business चलेगा 10 साल तक और कुछ change नहीं होगा.
Right. No, that's a good point. And another thing is that I always believe that the best way to learn about a business is not by looking at what other investors are doing.
Yeah.
The best way to do is go in the market. So you would be surprised. My dad actually sold a car during that period, 2022 or 23. And I said that this is a good time to see what is Carwale doing, what is Cars 24 doing, what is Spinny doing, what are the other. My dad is in Kutch, Gandhidham. And we ended up selling the car through Carwale. And I'll tell you what Carwale is basically their CarTrade's platform business is called Carwale. What big insight which I got from that particular incident was this, that all the other competitors, they are basically a competitor to the dealer community.
Correct.
In India, in the used car space, still majority of us use the dealer community.
Yeah.
We know someone in our family or distant relative and we do it through them. What Spinny and other, by the way, all these companies are good company. I'm not trying to put them in a
Correct.
bad. I'm just talking about the business model over here. What Spinny and Car24 model is that they will buy from you, they will keep it with them, and then they will sell. That is how they are becoming competitor to the dealers. Because dealers also do the same thing.
Correct.
They will buy from you and they will keep it with them and then they will sell. What Carwale does is they say that we are completely 100% market player. We are not going to buy the inventory. So what they do, they tell dealers that you come to our platform. You pay a very minimal subscription fee annually. And I am giving you a guarantee that you will get a lot of leads from us.
Good cars.
Like one of the leads was my dad's car lead free ad which I posted on the Carwale. See, look at it from the point of view of a dealer. How has the dealer business evolved over the years? If, say, for example, I am a dealer and you are you possess a car or you are looking for buying a car, I have to personally know people who are willing to sell and personally know people who are willing to buy.
Correct.
They will not come to my office daily. As in, some of my friends and relatives may come, people who know me. How do I get more customers? It's incredibly hard.
Yeah.
I have to personally go and meet that or do my marketing or do. And here there is a platform where I am getting all the leads.
Correct.
So CarTrade or Carwale is making dealers a part of its ecosystem.
Interesting.
They are not becoming their competitors. I'm not saying Spinny and Cars24 will not be able to be successful. What I'm trying to say is that something which has happened or which has been a legacy for multiple decades, it's not very easy to break that.
Correct.
It may, even if it gets broken sometime in the future, it will take time.
Yeah.
So if you can make it part of your ecosystem,
Even better.
that business model is even better than the other one.
Got it. Now, I want to ask you a question. Let's say 3,000 crore market cap sub, okay? And you are tracking it very actively in the good quality ones. Now, if you had to take two sectors that you're bullish on and something that you're seeing play out under 3,000, what would they be and why?
So one sector I've already told you, the cash management
Yes.
companies. That is a sector which is completely out of favor.
Yeah.
So I am very bullish on it
Okay.
right now. Other sector is a slightly broader sector, which I'm going to talk about, is the NBFC sector. And in the NBFC, I'll trickle down to companies which are not in the unsecured space. They are in the secured finance. Let me just explain for your viewers. Secured finance is where, say for example, you are the NBFC player and I am someone who is looking for loan. So if you are a secured financial player, I'll go to you and I ask you for loan. You will tell that I will give you loan. I'll do my assessment. I'll give you the loan, but I need something as a guarantee, collateral. Until unless I give you collateral, you will not give me loan.
Got it.
Okay, that collateral could be shares, that collateral could be gold, that collateral could be house, that could be anything. But it has to be a tangible collateral.
Okay.
Okay, so I think these businesses are safer. And why I talk about safety over here first is that because banking and finance and NBFC business is probably the most difficult business on earth.
Yeah.
Because in all the other business, when you make a sale, money comes in to your account. Here, when you make a sale,
Money
goes out. So what happens in any lending transaction, if say for example, I am borrowing money from you, you are giving me money and I am giving you a promise
that I will pay back.
that I will pay back.
Yeah.
So your job is so difficult that you have to first believe that I'll pay back. You have to do your due diligence and understand that whether I'll be able to pay back. Not just able, do I have the willingness to pay back?
Correct.
Okay, that is second. And third is the timing. I have said that I'll pay back in 2 years. What if I take 3 years or 4 years? So that makes it very difficult. And that is where I believe if you look at all the big, even though we are focused on the microcap space,
Yeah.
if you look at all the big lenders who have done really well, they started with one narrow focus. and from there they move to others.
So this NBFC, which are you looking
so I'm
at
coming to NBFC
housing
now.
finance or?
I am looking for secured NBFCs which use house or gold as collateral and give SME business loan.
So LAP, which is loan against property,
Yes, but it will be for SMEs focus.
and SME lending. Okay.
Focusing more on the SMEs. So I can give you few examples.
Yeah.
I'm not invested in any of them. I'm
Yeah.
just giving them as examples. So one company which is doing extremely well there is, I'm forgetting the name of the company. The founders is a very active person on LinkedIn. His name is Asim Dhruv, and the name of the company is SBFC Finance.
Very good.
So that is doing very well. It's not a microcap company. It's I think around
9,000,
9,000 or
12,
11,000 crore market cap. There's a smaller company which is by the name of, again I
Purple,
forget.
kya?
Huh? No, Purple is a very 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 tiny company.
Yeah, that is also-
That is a very tiny company. We are just tracking it. We wrote a blog on it also. But
Yeah.
it's too small a company to right now bet for me at
Yeah.
least. But it's an interesting company again. Okay, what I was trying to talk about was there's a Ahmedabad-based company which is again into the similar kind of space. I'm forgetting the name. I'll probably share the name later.
Yeah.
And then there is a company called Northern Arc,
Yeah,
which
that-
is also, and in fact, when you talk about Northern Arc, I think you should look at some of the best who have done really good work. So like Mr. Digantaria is an expert in banking and finance, and I think he wrote a very good blog on this.
Yeah.
So you can look at it. I'm not invested, by the way.
Yeah.
I'm just saying that these kind of companies and business models look interesting to me because they have long-term horizon, growth prospect, and their business model is built in a way where they are safe. And for banking and finance, I'm looking for safety first and then valuation.
Yeah.
Okay. So,
Yeah. Yeah, I
that
believe
is-
in that as well, because anybody can lend, but it's the thing
Exactly.
about how can you lend well. That
Yeah.
is the first question, right? Awesome. So now coming to the last question, right? For the viewers who are watching this, any mentors, books, authors that you want to talk about that helped you shape your journey? Maybe we can take some inspiration from that.
So there's a lot, but I'll try to come down to 2-3
Yeah.
most important. So first of all, I have to give credit to Warren Buffett and Charlie Munger.
Yes.
Because when I started my journey, it is there. So I read all Warren Buffett letters from 1957 till 2013-14. I read, and I read it twice rather. So and the way he talked about investing and made it was so simple and practical for his users or viewers, both Charlie Munger and Warren Buffett. That is, today maybe in this time it is fashionable to poke holes in their thesis and say that they have probably are past their prime. But even if I, as a microcap investor, if I have to look at how to look at microcap companies, I'll go back to his 1957 letters, 1961 letters, and I'll draw inspiration and learning from them.
Yeah.
But the problem with Warren Buffett and Charlie Munger, they're at a different planet altogether.
Yeah.
You need someone closer to you. And that is where I believe, not just for me, I think in India, there is only one person who has done great for the whole community, and he's Professor Sanjay Bakshi. He used to teach at MDI for, I think, a couple of decades. And now for last 4-5 years, I think he's teaching at Flame University. And earlier he used to write very good blogs. He writes now also, but that frequency has come down. I don't know why it is. But I have read all his blogs and I keep rereading some of his old blogs. So especially for your viewers who have joined the market maybe after COVID, they might not know the true value of Professor Sanjay Bakshi because he is not very active today.
Yeah.
So I would encourage all your viewers to go and read his old blogs. All is there available free of cost on the internet.
Yeah.
And there are some amazing videos of Professor Sanjay Bakshi. And I consider him as a guru. In fact, I'll share a personal incident. I kept writing emails to him and he started replying to those emails, and he told me right at, I'm talking about 2013-14, that Ankit, this is where you're going wrong. You should do this. You should, and ready to help.
So
and all those
sweet.
things.
Yeah.
So I think that has stayed with me. I understand he is busy. I don't disturb him much, but I know that I can always go to him. I can write an email to him and he will respond to me whenever I need. So I think those kind of mentors are special to you. So
Yeah.
that is Professor Sanjay Bakshi for me.
Wow.
When it comes to book, there are many books. Nowadays, I read more non-investing books because investing books, over a period of time, new learning comes very difficult. Recently, I read one book by Mr. Pulak Prasad. That was very good. But if you ask me one book, I would say something which has stayed for 6-7 decades. And I think it's like what Taleb says, that something which has lasted 50 years has a higher probability of lasting another 100 years.
Correct.
And that book I would talk about is Common Stock and Uncommon Profits by Philip Fisher. And why I say this is my favorite book is that if you read The Intelligent Investor, and that is also a very good book, and that is probably a much more popular book
Yeah.
of Benjamin Graham. Many of the things which you'll read today, you cannot apply because the market has evolved.
Yes.
The times have changed. But each and every page of Common Stock and Uncommon Profit is still relevant today. And that's what make that book very special. Some of my friends find it difficult to read. It's a little dry. But nowadays you have ChatGPT, you have several other ways you can get the lesson. But that is one book if you ask me.
Beautiful.
And I keep referring to that book again and again.
Superb. Ankit, I think this has been a very, very, very insightful conversation. So again, a big, big, big thank you for coming on the podcast and enlightening all of us. We've spoken about a lot of companies and we've also, I think, removed some of the myths of microcap investing. So I will be again engaged with your blog and I hope you put more stuff out. So for all the viewers who can also watch it. But again, a big thank you for coming on the podcast.
Thank you so much, Shashank. I am a big admirer of what you are doing and the kind of guests you have. I think I still consider it as an honor to be on your podcast. And I really enjoyed this.
Super.
Discussion.
Thank you. Thank you, sir.
Thank you.
So I hope you guys enjoyed this video, and if you found any value in today's video, please click on that subscribe button because this will help us get more guests in the future as well.